Hello everyone, good afternoon and welcome to today's trade in the US Open here at the live trade room. Now today is Wednesday the 22nd of August and you're all very welcome indeed to join us. Okay, so we've had an interesting morning. So we were able to trade the, sorry, let me just fix this briefly. So we were able to trade the European markets this morning, and we want to extract a couple of really important points really from today's trading. Firstly, we need to acknowledge, of course, the trading conditions and the trading environment. We are still trading summer markets as things currently stand, so all the big momentum in these markets are all away on holiday as things currently stand. So the markets are certainly lighter. It is an occupational hazard when you're trading the markets through the latter part of July and August. So we do want to draw attention to some very interesting price action, and there's a real important valuable lesson to be learned actually from today's trading. So I will discuss it very shortly. What we do here at the Live Trade Room is become a master of price action, understanding what's happening to price action, know what type of trader we are, look to identify these opportunities. Once we assess the market conditions and we have a directional bias in the market, then we go through a bit of a process in terms of our ability to execute with consistency and discipline. Two buzzwords that are banded around this industry quite a lot, but we want to show you specifically how to apply those skills when we trade. And also then we need to make a series of decisions regarding our ability to manage those trades. So as a philosophy, we look to trade the trend. So we're looking to go with the prevailing winds on larger time frames. That gives us a little bit more momentum behind our trades on a consistent basis. And we look to cut our losers short, and we look to let our winners run. So it's quite a relatively simple and straightforward approach, something that you can pick up and adopt very easily indeed. So without further ado, if we could just start with our risk warning. Just please do familiarize yourself with the risk warning involved in trading these financial markets. Of course, there's inherent risk. We do have a really structured approach with regards to managing risk, whether you're joining us for our day trading sessions or whether you are joining us for our capital growth webinar in the evenings. So so just before we begin, it's important to have an understanding of the news flow. So for this, we're going to get up Forex Factory. Let me see. So I'll bring Forex Factory up on screen, and really we want to have an understanding of any major news events that we're about to potentially get involved with. And we can see straight away that we have a core retail sales number. It is a monthly figure. We can see with the analytics, which is why we can't using it, is it's kind of an erratic figure, and it is a monthly figure, so it's not as important as other retail sales numbers are concerned. But last time out, we beat expectations. This time the expectation is minus 0.1%. So obviously sales is an important indicator for the health of an economy, and if it's a positive number, it's likely to benefit the Canadian dollar, and if it's a negative number, it's likely to be perceived as negatively impacting the Canadian dollar. In addition to that, we have existing home sales in the US. And again, if we just take a bit of a snapshot, you can see, you know, the direction and the momentum is very much up to the upside. Over the last few months here, we can see that there is a slow sort of just rolling over to the downside. We did peak back in December 2017, and since then we've just seen a slow sort of grinding numbers, just grinding a little bit lower there. So again, the existing home sales number is an important economic number, not by any stretch the most important number to focus on. And another important event really from a news flow perspective is the crude oil inventories. It's just interesting to see how the crude oil reacts to this number every Wednesday. We're expecting a minus 1.6 million barrel projected figure. which is just down here. You can see that the last figure that we saw last week was a strong figure, even though we projected actually a lower, a minus number lower than the minus 1.6. So again, we'll wait and see how this, how the market, the crude oil markets react to the crude oil inventories number. Sometimes you can get, it's a little bit unstable to trade per se, and what we mean by that is sometimes you get a positive number, negative price action. On other occasions you get a positive number and positive price action. So it's a tough number to pin down. But if we start seeing price bounce off certain support levels or resistance levels, and we start seeing some momentum coming in either to the upside or to the downside, then we will look to potentially make an assessment of the crude oil inventories number and actually trade with the market if we get the setup that we're looking for. So we just need a lot of factors to come into play. All right, so that's just a brief understanding outside of the major macro news events, global trade wars between the US and China, like we keep saying, Brexit negotiations, issues in Europe, US and tensions between US and Iran, and the some of the issues that exist there, with the US putting pressure on its allies to enforce sanctions against Iran, and it's all relatively complicated. But the global trade war is definitely a major concern for the financial markets, creating a little bit of hesitation and doubt. So we've got those macro events occurring. We've got the Jackson Hole Symposium as well, Thursday, tomorrow, Friday and Saturday. So that has the potential to be a particularly volatile period as well. So what we want to see is a market that was bouncing off, like this is a really good example. It was a market that was bouncing off a really strong period of consolidation just in these levels, as it was yesterday, ironically, where we were looking to get into this market below the 1566, which we did, and we were in profit for some period. And then we were able to get out and taking a small loss on this trade, because you can see the reversal kick in. Now, there is an important point to make, is there any aspect of our analysis that is incorrect? The answer is not really. It'd be much preferable if this level was just below the 1547 level, but apart from that, we'd still look to trade this kind of setup on many occasions. And let me tell you why. Because we were clearly running into resistance at those levels. So when we get strong levels of support and resistance, we want to see how these markets stack up, and we want to stack the odds in our favor by trading support and resistance consistently. However, what we've effectively seen is really strong continuation to the upside. Let me show you on a 1 minute chart, for example, a really strong impulsive move up from these lows, and this market has extended higher. Now, I'll be interested to see if we start getting rollovers at this price, the 1600 level. Don't forget, not so long ago we were at the 113, with the expectation for the euro dollar to rapidly devalue. So we're getting a bit of a bounce in the euro. Now, still really at this point, our directional bias when we talk about the US dollar is very much to the upside as things currently stand, but that can change relatively quickly. Now, the reason why we're looking to sell this market and not to buy it is because we can identify all of these significant levels in here. Let me put another let me put another blue line just in here, so you can see that it's a long-term structural level. So we can see here that the 2155 level. So when we saw a break of this, like we did today in the euro dollar, just in the smaller term time frames, we got really strong continuation. And that means considerable profit if you get these right. So what we saw today was effectively a false breakout. So we got the move to the downside, and then we got the reversal. Let's just say from this kind of level here, we got the break lower, but then we got the strong reversal back to the upside, and this market just continued higher. So when we look at this, is there anything we'd change about the analysis? No, there's not. We'd still look to sell this type of setup 99 times out of 100. And when we carry that across to bigger time frames, like a daily time frame here, and we get into these markets and we see the confirmed break and we confirm that these markets are pushing lower, we become sellers at this point. And then if you translate that to smaller time frames, what we're looking to do in this market is to continue to look for every opportunity to sell this market unless we have a reason not to. And we actually are still of that opinion. It was a bit tricky in between these levels in here. You can see the price action over the summer period, just moving sideways, not great. And then we got the strong flush down, and what that can do is present us with, again, additional fantastic opportunities to sell this market. Now, what we're seeing is a bounce off the 11300 level. We're just seeing a straightforward pullback. And we've tried on a couple of occasions to sell in and around this level in here. It's a strong level of resistance, and that's what we've been looking to do. But as you can see, we didn't have much success, that this market's continued to strengthen against the dollar. We've seen a little bit of weakness creeping into the dollar across the board. We are going into the FOMC meeting minutes this evening, which is an important point to just reference really at this point. So it'll be fascinating to see when the FOMC meeting minutes comes out at 7 p.m. I'm going to show you, I'm going to take this away and just show you that on Forex Factory once more. We have this at 7 p.m. and this is UK time. And for some reason this clock seems to continue to change, which is very annoying. But now we're back to the correct time, 1:15. But the time frames are very much the same on the chart, 7 p.m. So we'll see how price reacts to that. Yeah, so Hans, you're suggesting, I'm sure you're talking about the euro dollar. It was an uptrend. Why are we looking to sell? No, we don't trade Renko charts. Actually, we just trade candlestick time frames. What we're really interested in, if you hover over any of the candlesticks, is the high, the low, the open, and the close. We apply that across all of our methodologies. So we don't trade Renko. We do appreciate that, you know, some traders do. But the information that we get from Japanese candlesticks can be quite powerful if it's used in the correct way. Now, to suggest, when you refer to this as an uptrend, we would refer to it as a pullback off a low. And that's all that is so far. So when we talk about trading consistently with discipline, we're not looking to go with the trend and also buy or sell the reversals off those trends. We're actually selecting to just trade the trend. Now, we were expecting a bit of a reversal around this level, and on this occasion we didn't get it. So it can often make you look a little bit silly if you are looking to sell off these levels of what was previously support, looking for opportunities. If you get the structures in the smaller term time frames, which we did, then we'd be looking to sell these markets quite consistently. And what we mean by that is identifying sideways moving patterns for prolonged periods, like we saw here when we entered our trading desk. We were able to capitalize on the move lower. If I'm looking at the correct time and price, yeah. So we're looking for opportunities to sell if we run into resistance, and this level of resistance is represented by the green line currently up on the screen, and that price point goes back, you know, a number of months and years. So it is an important level, and we got a sideways moving market for quite some time, and we were looking to capitalize on a bit of a sell trade to see if we get a bit of a correction of this uptrend on a smaller term time frame. So I agree with you, on a smaller term time frame we are firmly trading an uptrend. That's what makes the precarious nature of the trade. That was why we reduced our risk and we took a really small exposure in the markets. I think 5 pips in the pound is what we exposed, 8 pips in the Aussie dollar, and I think 9 pips in the euro dollar. So because of all those reasons, and you are absolutely right, it was an uptrend on a smaller term time frame. But if you look at the bigger time frames, which we like to conduct some multi-time frame analysis, we're clearly in a bit of a downtrend. So so what we're looking to do is look for opportunities to continue to sell, and we've had that approach since mid-April, looking for intraday opportunities to continue to look for opportunities to really sell this market, and that philosophy changes. So when we talk about trade identification, assessing the market conditions, very, very important. Yes, we are experiencing a pullback off a low. Do we think it's an uptrend on a bigger time frame? No, it is literally just a pullback for us as things currently stand. But we ask ourselves, what is our direction of bias? What we don't want to be doing is flipping our trade bias. So we are just in this period of time looking for as many opportunities as we can to sell this market. We're not looking for buying opportunities unless something structural changes hands. And what we mean by that is a structural failure on a daily time frame. So let's say we do get that little push lower, we create a bit of a low in this market, and then we start breaking these new highs and price starts to break above that. Under those circumstances, we would change our overall bias on this market, and we'd look for opportunities to buy. If we got a break of this structural level, if we attempted to make a new low and failed, because this is then the start of potentially a reversal. So we really just want to identify the market conditions, understand our directional bias, and look to trade what we see. And that's really what trading is about for us. And the fact that even though we took some losing trades, very, very small losing trades, we're quite happy to cut our losers short, take a small loser, because we're okay taking a 5 or 8 pip loss on a trade. But when we get it right, we're looking to generate 30, 40, 50 pips on our winning trades. And that's how we grow our capital on a consistent basis. So psychologically, we're fine, we're okay. Yes, we took a few losing trades this morning, very, very small trades with low risk, because we're trading summer markets, and because of all of that, we were incorrect in our analysis. And you're absolutely right. It's an uptrend on a short-term perspective. We're not looking to sell it now, like that's not really in the pipeline anymore, but it was in and around these levels of resistance around yesterday's close. So you know, we'd still be advocates of making the same decisions even though we've taken a couple of small losses. Really, what's happening across the market now is we are getting dollar weakness, and I think that is mixed with some yen strength, some European strength coming into these markets. So we really have, and you'd be absolutely right, if you are a reversal trader or someone that looks to trade the pullback, then this is perfect trading conditions for you. It just so happens it's not the type of trades that we look to focus on executing consistently. So we don't want to be chopping and changing. We want to try and educate traders in a very consistent and competent approach to trading. And yes, that does mean we do need to be a little bit more patient and wait for the markets to move in the direction in which they're moving. Now, very few markets are moving in the direction in which we would currently like them to move. Again, we're getting a pullback off the low in the pound dollar, sort of choppy, indecisive price action in the dollar yen, the dollar Swiss. Does that make sense, Hans? You know, I suppose what makes the financial markets is people have quite rightly to agree or disagree. What we know over the years, and certainly with our experience, is the more consistent we are in the decision making, the more money we make. So really for us, it's a case of being consistent in our approach. A trade call that we did make this morning was a breakout below the 98.36, and we've had a really strong move lower and a pullback to this level as well. didn't actually take the trade because I wasn't able to be at my trading desk during this period. And the other thing as well is important is that during normal trading hours, the first 2 hours are really quite important. It's when you get your explosive moves. Now, we didn't see that today. Ironically, we saw the explosive moves probably 10, 11 p.m. During the European session. Volumes are fairly light. Price is moving. Yes, it is. But it's a good point to note that if you're not at your trading desk, we're seeing a lot of contradicting information across many markets. Yes, the dollar is weakened, so that for us became a bit of a no-brainer. Those of you that received our daily trade watch, we identified a break below the 98.36, I think it was. No, it was last night, sorry, the 98.42 level, which is slightly higher. And then this morning, again, we identified the 98.36. It's just the move occurred a bit too late for us this morning. But you can see this move extending lower. It's very likely to pull down to the 97.90. This is a structural failure to the downside to break beneath the weekly low, the 98.56. So in hindsight now, it really does stack up for us. If this occurred during 9, 10 o'clock and we weren't trying to capitalize on some dollar strength, we would have been in this market. And it was always a case for us to either decide to buy dollar strength or to sell dollar weakness. And we made the decision to buy dollar strength, which was setting up across the board, across all of the pairs. And ordinarily, we're fairly comfortable with the analysis. But take two things away. If you have your directional bias, try to stick to it. You might find some short-term gains and stuff, but over the medium and longer term, you'll be so much more profitable if you know what type of trader you are and you know what direction you're looking to trade these markets. It just so happens in today's trading, or certainly this morning's trading, we weren't really able to capitalize the way we would have liked to. And we were in profit. I think we were up about 20, 30 pips at one point. But again, we're not looking to take really small winners. I mean, we will do if the price action determines us to do that. What we want to see is the market move in our favor as quickly as possible and then start amending and booking in profit as the market moves in our favor. We just didn't get that opportunity today. All right, then, great, Hans. Great stuff. I think, Hans, did you mention yesterday that are you interested in joining us? The details are there below. Did you have any problems gaining access and things like that? You know, do let me know if you are looking to join us. For everyone else, there is a 14-day free trial, so you can join us completely free of charge, just to gauge and to see how we educate traders to trade these markets profitably and with consistency and discipline and things like that. So I hope you were able to join us, Hans. So look, this is the dollar CAD. Again, indecision at these prices. The Aussie dollar, let me move across. We're looking at it on the 15-minute time frame. Our expectation, if we were looking to trade it, would potentially be to the upside. We've got a really strong explosive move eventually. We're just rolling off these highs now. But if the dollar continues to weaken, we'll see this market continue higher, and we've retraced a lot of today's move already. So definitely quieter markets. We're trading summer markets as well, so our expectations levels should not really be ultra high. We shouldn't be ultra aggressive. We should certainly look to reduce risk on trades quickly during these markets. And as we roll towards the end of this month and early September, you'll see things begin to change. So we're firmly getting back into the swing of trading these markets, and we've just got to negotiate the conditions. Matt, I don't know if you're currently online with us, but you were we were discussing on a 4-hour chart a break below this previous candlestick, and as you can see, I don't know if you are currently online. I don't think you are, but a break beneath this daily low we had a bit of exhaustion kick in at these levels. A really strong move, and then we were below the 66.86. So I think Matt was looking to trade below that level. But as you can see, this is some of the aspects of trading. With pending orders. You can use them for this effect. So so to place a pending order beneath the low, and if the market triggers that order, you're into it to the downside. And if you get a bit of a reversal like we've seen here, then you can cancel the pending order. So yeah, so okay, sorry Matt, apologies. You are with us, so that's great. So yeah, you cancel the order. Yeah, absolutely, that's what I was just saying. So they do provide you a level of flexibility if you're trading higher time frames. Maybe you don't have the time to commit to trading smaller time frames and capitalizing on those smaller explosive movements in these markets. You know, if you want to adopt a more of a longer term time frame, like trading 4 hours, you obviously just need to, your commitment to the charts, it wouldn't necessarily need to be as much, although you can get yourself into a tricky situation where you could sit around looking at these charts for hours, which is why we really like to trade small term time frames once we get the signals we're looking for, and get in on a much smaller time frame, because you can capitalize on a really strong percentage gain relatively quickly. Euro pound, really kind of strong in the end, so we're definitely seeing some strength come in to the euro against the pound, the euro yen. So we're seeing a bit of yen weakness, but it's really more about European strength. I want to just have a look at the dollar yen indecision, not much going on. So for those traders that look to trade the pullbacks, there's opportunities in the euro yen, the dollar yen. Now we wouldn't want to be trading those with our own capital, but I'm quite happy to discuss some of these opportunities with some of you if you wish. And we just have a responsibility to our traders to not move the goalposts on you, I think is probably the way to put it. We want to provide, like when we trade our own capital, we obviously have variations in our approach, which we're obviously, we have the experience to take on more risk in certain situations and things like that. But we have a responsibility on our public forum where we're trading the markets live every day to offer you guys a bit of a stable, consistent approach that can be easily understood, can be followed, can be queried if you wish. You know, feel free to query any decisions we make. If you want to understand our thinking or the psychology behind the trade, if you want to discuss what type of trade it is, we'll go into detail. This is very much a learning environment, which of course we want to make significant returns on our capital investment and our time, while we're able to educate you about trading these financial markets. Too many traders come and go very, very quickly, and what we want to do is make sure that you guys are in this environment for as long as you possibly can to effectively learn how to trade these markets. So it's taking ownership over your own learning, and hopefully the idea is you can do that through hopefully some of the skills that you'll pick up from us, the approach that we adopt, we're advocates of certain principles, and we think those are all very, very useful principles to teach you. Like I keep saying, my first involvement in trading these financial markets was back in 2008. In 2010, after a couple of very difficult years, as most traders experience, I was able to benefit from a bit of mentorship, and ironically, I'm now repeating a lot of the same things that I was told many years ago, and it profoundly improved my performance. It profoundly improved my knowledge and awareness and understanding. And the whole live trade room has been created around that principle, to actually provide trading education with transparency and integrity, and hopefully you guys do agree that that's the case. So pound yen, just bouncing off these lows. we just need to be patient, because again, when we see these structural failures, we're looking to sell, we're looking to sell, we're looking to sell on an intraday basis. These will give us fantastic opportunities. Same here. You could have 4, 5, 6 days of just selling, 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 selling. And you can see how if you capitalize on trading the trend, going with the market, you can have really strong explosive moves. But that's only if you understand the market conditions and you have a directional bias. If you don't identify the trend, the overall trend, it's very, very difficult to trade. And you can do that by looking at bigger time frames. Overall, this market is moving to the downside. So very simply, we're looking for this market to pull back to previous levels of support, somewhere in and around here, maybe with opportunities if we get a selling candlestick to get involved in the next leg to the downside. The reason why that is we know that these markets move in this direction. They don't move in a linear fashion. So for all of these reasons, we strongly believe that a lot of these principles will assist you in your longevity in trading these markets. And when you get to the stage where you've got a number of years of experience under your belt, practicing and improving your techniques and your knowledge and your understanding of these markets, then it's a very, very lucrative skill to learn. Something that you put time into, that you will effectively benefit from the rewards of. That's why people do and are very attracted to trading these financial markets. Okay, so just wanting to look through some of the other markets as things currently stand. The US oil is getting a really strong pullback. I'll be interested to see the US US crude oil inventory numbers coming out at 3:30 p.m. London time. We're currently in a bit of a strong pullback off these lows. So really a bit of patience is required with some of these markets. We're getting that strong bounce back. Let's look at the gold market on a daily time frame. And those of you that were with us the last couple of days, we were talking about the 1204, and so there's a bit of support of price action up here. What level would we be looking to trade this market to the downside? It's the 1204. So we're edging closer to it, and that will be getting close as well, somewhere in and around this level in here. If we get some structural failures and we get some strength coming into the US dollar, it might become a little bit of a no-brainer. It's just right now we don't really have the setup that we're looking for. So again, a little bit of patience is required. Unfortunately, a lot of these markets are just facing the wrong direction for us. There's significant indecision in these markets. So that's part and parcel of trading these financial markets. Unfortunately, we can only trade what we see, and if what we see we don't like, we don't trade. So if in doubt, stay out, and that's very much the overriding principles right now. Even though it was looking quite positive for us this morning for a period, we needed the next move to the downside in some of these markets. If I just show you, so obviously they're moving to the upside, but when we're looking at all of this price action here, yeah, and we got the extended move to the downside, and then we got a double bottom and a structural failure. This is effectively where we had a stop loss just above this level here, and we were obviously taken out of that particular move. But like I said, there was an 8 or 9 pip stop loss in this market. So just to show, like, because we've got a strong approach to risk management, we're not exposing this much capital. There is traders out there that trade without stop losses. We certainly are not advocates of being that reckless with these markets, because generally in our experience, having worked with thousands of traders over the years, there's only one winner, and it's very rarely the person that is trading without stop loss. There is an argument to suggest that the more experienced you are, you can sort of migrate over to that, but it's still very, very risky. Very, very risky approach to take. So not to be recommended, especially if you're starting out in this environment. Be really controlled with your risk exposure. Manage those trades effectively based on a set of principles. and cut those losers short as quickly as you can. And that's what we were able to do today. We were able to get out when the market stopped performing the way we would like it to. And if we got an extended move lower, we were going to be breaking even at these levels. It's just obviously the way the markets unfold sometimes. Okay, so we're left with kind of markets that are all facing the wrong direction for us, which is a bit of a shame. Maybe we can reserve a bit of a mental trading capital, maybe not get too exhausted. I suppose the one trade we could look at could be continuation in the dollar Swiss, but we are really almost scraping the bottom of the barrel at this point. Let's have a look at it on the daily time frame. A lot of the move has already occurred. So the actual level to sell this market was from the 98.36. Do you mind me asking, is anyone currently online? Was anyone able to trade this market? Maybe some more of you from the live trade room were able to take the trade, but I don't believe anyone did in the end. Certainly we didn't. Just purely because it wasn't at our desk and actually physically missed the move. So we generally like to see the moves in the first 2 hours of the trading session. If not, we generally kind of take a break from the markets, and that was when we obviously saw the move lower. So let's see how the dollar CAD got on. Just with the news event. Let's see on a minute time frame. So we had a little bit of a move lower. As you can see, it looks like we might get this little rollover to the downside. So that just suggests the retail sales figure was a little bit more positive than the minus 0.1. So let's see what the case could be. Plus 0.1, maybe something like that. Minus 0.2. Oh, okay. So actually, the core retail sales came in as expected, and the retail sales figure just came in marginally underperformed from expectations. But I suppose as far as the market is concerned, it has the and maybe price action will still prevail in this, as you can see what's happening. So what we have seen is, and that was quite interesting because my initial reaction was, oh well, maybe there was a positive number coming out on the retail sales, and in fact that wasn't the case. It was actually negative. But what we saw was some initial negative news but positive price action. That's what this move represents. And then what kicks in after 10 minutes is actually the real move, which is the negative news, or ever so mildly negative news, and then the positive price action that you would expect from a negative news release, which is the dollar CAD strengthening a little bit. So that's why trading the news is notoriously very, very difficult. We certainly like the dust to settle before we'd get into a trade. Now it's rejecting at these highs. And the only reason why we suggest that's the case is because these figures are largely at forecast. So it's only if you get a strong deviation to the upside or to the downside might you have a little bit more faith in the trade. But as you can see, it's come largely in. These are only monthly figures as well. So not a major issue really. Interesting, the highs just bounce off these levels in here. Let's have a look at it on a 5-minute time frame. So on an intraday basis, we are still technically below the weekly low of the 30.50. That's last week's low. So we'd expect continuation to the downside, but as you can see, it's quite choppy. Doesn't fill us with huge confidence, but there is a clearly defined level in here. And it does coincide with the high, roughly the high of this candlestick. So let's see if we get a really strong structural failure to the upside and we start seeing some strength come into the dollar CAD. just so you know, guys, those of you that are potentially interested in becoming a member, we have absolutely a wealth of education, little videos to assist you with any knowledge or skill deficit that you might have. There's a wealth of education available for all of our traders. We have a risk management calculator that's available. We're strong advocates of really keeping control over your monetary exposure when you trade these markets. Know exactly how much of your capital you're trading, what percentage of your account you're trading. We have help videos, we have guides. There's a lot of free accessible content. We do have multiple membership packages, all very, very affordable. So do look into the options available. You know, you can go through our website, which is TheLiveTradeRoom.com, and just get a little bit more information on that. But certainly $9.99 is without doubt. It allows you to access our live trade rooms every month. So hopefully you'll find that on the affordable end, with multiple live trade rooms every day. So we're just seeing the news sort of play itself out. Let's see if we start breaking these highs. Could it give us an opportunity to buy it? Not really liking this. Tomorrow now, if we got continuation above the daily highs, we might suggest that we want to trade above this level and see if we can push this higher. Just today, I'm sorry to say that and we're getting this market continue lower. So let's look at it on a daily time frame. So we have a strong level of support, just probably 18 pips below this level. So you see, we could actually have placed a pending order, and we did discuss it amongst ourselves, and we decided to refrain from doing so, just because we all share that we are in these sort of situations of doubt, and generally we just decided, if we're all collectively in doubt, let's stay out, let's protect that capital. Yes, we are getting the move. Yes, we would like to trade it to the downside. We did make the trade call last night at the 98.42, but summer markets seeing potentially a bit of a couple of sort of minor little moves in the dollar. There's a bit of hesitation out there. There's a bit of perhaps a little bit more manipulation than we would ordinarily like, and as a result, we decided to stay out of it. So that's really the only kind of tradable market that we could have got into. So whatever we want to do, we want to remain consistent in our approach, and buying this market here goes against our prevailing approach. It's not to say that there's not viable opportunities. Of course there is. It's just not the type of trading opportunities that we personally look for. If any of you have any markets that you would like us to look at, do feel free to post them into your chat box. We can certainly take a look if there's other markets that you want us to have a look at for you. Are any of you guys in trades as we currently speak? Do let me know. Just be interested out of curiosity. Do post it into your chat box, and obviously any comments or anything like that, do leave them below. Hi Scott, so you're just suggesting that you're selling the CAC. Let's go and have a look. Okay, just off the 54.33 potentially. It's kind of a reversal off yesterday's high actually. So this is yesterday's high in here, and we've had a very neat sort of double top. We have now seen the close beneath that level. So yeah, there's a double top sitting in this market. Probably there's other levels that this market would need to negotiate to the downside, but I suppose the only sort of observation we would make is that we're seeing this move, and what this effectively is a consolidated market between a 54.31 to the upside and a 54.07 to the downside. So what we are effectively doing now, you might disagree, there's opportunities to sell the highs and buy the lows and all that kind of stuff, but the market conditions are very much range bound within this kind of bit of price action. So selling at this level, were you looking to sell at the 54.14, Scott? I wonder what price were you looking to get in at? Do let me know if you can. But just the prevailing, your directional bias, what you'd be looking to do is to sort of overcome the upward trend. We're moving sideways and looking to sell that level. Can absolutely stack up. Let me get this off your screen. So yeah, it's a viable level to sell from. There's just a strange sentiment behind some of these equity markets right now. Just from a fundamental and a sentiment perspective, they make it a little bit choppy. It's certainly not clear cut by any stretch. So and that's a concern for us. So the most beautiful trades we take is when we trade the trend with positive sentiment or negative sentiment, depending which way you're trading, with the fundamentals rowing in behind it. So a really good example of that would be the pound. So the fundamentals are very much negative for the British pound. So we're likely to see the pound dollar move lower. A lot of the sentiment, the news coming out of the UK is very much disaster. Are we heading towards a no Brexit deal? All of this is not really good for the economy. It's not good for decision making for corporates and institutions. It's very it has a negative impact on the economy. As a result, we're likely to see the value of the currency devalue and move to the downside. And then we can look at this chart and say, is this supported with technicals? What direction is this market moving in? And if you look at a daily time frame, you see structural failures to the downside on numerous occasions, looking for opportunities to sell. And we're actually in a channel right now where the prevailing wind is to the downside. So all of these, the fundamentals, the sentiment, and the technicals are all pointing to the downside. So do we want to trade these sorts of markets? Yes. What direction? To the downside. And it's just we're getting uniformity. So we're getting a lot of these aspects falling into place. All very, very important. And what you'll find the longer you're with us is that the impact that will have on your account balance when we get these trades right. So i.e. when the market conforms to the type of trades we look for, you'll see the benefits of that in a very consistent manner, not an ad hoc, wishy-washy kind of way, but in a very definitive opportunity. None of us know which direction these markets move in, but we can really look to stack the odds in our favor. And what we really do when we trade is trade probabilities. That's it. the probability of a successful outcome. We get some right, we get some wrong. We cut our losers short and we let our winners run, and that's what allows us to really significantly grow our capital over the medium and longer term. And it's never about the next trade. So if we get into a trade now and we take a loser, we take a loser. We're very likely to reduce down our capital exposure. We're very likely to take all the precautions necessary, reduce the trade size, mitigate the risk on the trade, take all these risk management precautions when we trade as standard. So what that means is we find ourselves in a situation, just from a theoretical perspective, is I don't know if you have seen this before, but what we can do, there's only 4 potential outcomes of a trade. You could have a big winner, you could have a big loss, you could have a small win, and you can have a small loss. And what we find statistically is that, generally speaking, if you took, let's say, 100 trades, the small winners would generally offset a lot of the small losers. You might have a surplus, or you might have a deficit, but all in all, it would relatively cancel themselves out. And if you adopt a risk management approach that just simply prevents big losses, a famous saying from oh, excuse me, what's his name? Warren Buffett, is the rules behind the financial markets is rule number 1 is do not lose, and rule number 2 is don't forget rule number 1. So that's what, if you read any of these books, it's very, very interesting, very engaging approach to trading. He will do a lot of his investments during difficult and recessionary environments, because obviously the price he'll pay for everything is that much more reduced. But his simple approach is don't take losses. And if you actually embrace that fully, and you make sure whatever you do when you're trading these markets, you don't take a 10, 15, 20% hit on your trading account, which unfortunately so many retail traders do, and that's a major problem. Because if we just took 100 trades, the small winners would offset the small losers. So if you get markets moving away and you book in 10 pip profit, fantastic, pat yourself on the back. If you take a 10 pip loss, don't really worry about it too much, because you know over 100 trades, they're effectively going to cancel themselves out. But if you, through effective risk management, you make sure that you don't take losses, you don't give that market the benefit of the doubt, you don't expose your capital in a reckless manner by not using stop losses. If you're very effective at your risk management, you will never be in a position where you're taking a big loss. You'll never experience a margin call. You'll never experience all of these issues, oversizing. If you're nice and patient, you won't be aggressively attacking the markets all the time. You'll be nice and calm. You'll wait for those opportunities to arrive. And then what that means is, by default, then what you are left with is big winners. And that is when you see your equity curve maybe even dwindle if you take some losses. That's when you see the sharp little moves to the upside. You might plateau a little bit. You might have a frustrating period, and then bang, you get that sort of upward moving equity curve. All equity curves take drawdowns, which is just periods where the balance moves to the downside. That needs to be part and parcel of trading these markets. It's like a business. You know, you're going to go through good cycles and bad cycles, but if you control this drawdown and allow the winners to run to the upside, that is what trading is all about, and seeing your capital grow over the medium to longer term. So that's what we mean by applying this in real time. And what we hope is that each of you will kind of benefit from this the longer you are with us. So if you guys can join us, please do. You'll benefit from that, a lot of this a lot earlier. So Hans, you know, I appreciate you thinking about it, but, you know, do feel free to join us. You will benefit from it exponentially, we believe. I suppose the price point is hopefully a bit of a no-brainer for you as well. So hopefully potentially nothing to lose on your side, but potentially everything to gain. So hopefully you regard that as a good deal. So look, I'm just conscious of the time. We'll pack up now. We will be switching over to the live trade room now very shortly. A couple of other suggestions. You're in the Aussie dollar, Philip. Great to see you over here at on the YouTube channel as well. Let me see. So you're targeting the 58.03. So let's get that Aussie dollar open. We'll just have a quick look at this through YouTube. Aussie dollar. Sorry, the Euro Aussie, should I say? So let's have a look at this. We'll open up a new chart. We'll right click. Whoops. So not really much trading this afternoon, as you can see, but hopefully a little bit of an educational session. If you do have any thoughts or comments, please do post them into the chat box for me. You may agree, you may disagree. I'd be interested to see what whatever you're looking to do. So you're long the Aussie dollar. Not a bad idea. Just taking a look at this bit of price action in here. Anywhere above, we'd certainly be advocates of buying above the 57.25. We'd have a really strong base off here in which to buy this market. The prevailing winds are to the upside, so you have your directional bias. You've sort of seen what's happened here. We've had a move to the upside. We've effectively moved sideways, and then we've pulled back a bit, and it coincides with these lows as well. So so anywhere above the 57.25, certainly from our perspective, would completely and utterly stack up. So very, very well done. Good spot on that. We are seeing some strength come into the euro over the course of yesterday and today, actually. So it feeds very, very well into that. And we've seen a nice strong move to the upside with your take profit at 58.03. So we are very close to that. So you're only sort of 10 pips away, which again is a good take profit. You know, it's just identifying these levels in here as potential resistance. So the likelihood is we'll get a little bit of a push up to the 58.03. And it's looking like the momentum and everything is fully behind the trade, so it looks like a very successful trade. The only thing is the 5800. It looks like we're going to be you're going to be booking in profit on that trade. So fantastic trade there, Philip. Well done. The only thing really, just as an observation, really more than anything, is the 5800. It's a psychological. It's a major level. We might even see price achieve that level as things currently stand. As things currently stand, so we're very, very close. But you see the 5803 has the potential to, sorry, the 5800 has the potential to be a little bit of a resistance, a level of resistance. I would certainly just maybe consider putting a stop loss at 57.99, just 4 pips below. But it looks like you'll be achieving your goal. It's just if the market decides to pull back off that level, maybe look to book in profit. You're so close to it as things currently stand. So do bear that in mind. Okay, so that's just my 5 pence worth. I don't think we have any more comments or anything like that, so that's fine. Some good trading there, Philip. I'll keep a close eye on that. So those of you that are perhaps joining us or perhaps currently already in the live trade room, we will be switching over now. So I shall bid you a good afternoon. Feel free to connect with us. Please do subscribe to our YouTube channel below. Like and share and comment on this particular webinar if you possibly can. That would be much appreciated. We're just beginning to grow our YouTube channel, so we hope to be here for the longer term, and your support would be greatly appreciated. So just search for us. Obviously you're joining us through YouTube now, but if those of you are experiencing this as a recording, then just search the Live Trade Room, all one word, and you'll be able to subscribe to us directly. And we're live every day at 8 AM and 1 PM through our YouTube channel. In addition, you can subscribe or connect with us through Facebook, Instagram, Twitter, and LinkedIn. The details are there up on screen. So from everyone here at the Live Trade Room, please do have a look at the description below. I appreciate we haven't been able to take any trades this afternoon, but patience is a big skill that we think traders need to really have a proper handle on. Be nice and patient. Yes, the rewards are there, but not necessarily if you're jumping in all the time and you take 5, 6, 7, 8 losses before you actually get the I suppose the higher probability trade start to kick in. And that's what really we're going to focus on looking for, is those high probability trades. So please do feel free to join us if you possibly can. The link is there below. There's a 14-day free trial. No commitment, no obligation of any kind, no scams, no tricks, nothing. It's just pure trading education, and that's what we pride ourselves in, is our integrity as an organization, but also our transparency in how we trade these markets. So hopefully you'll find it a very, very useful experience. So from everyone here at the Live Trade Room, do take care, and we'll speak to you soon. Bye for now.